Okay, good morning and hello everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Mike Boutros here with you. We just got the release of the weekly jobless claims in the United States, slightly higher, 277,000 versus 271. Slight downward revision to the previous one. Continuing claims more or less pretty much in line with expectations. Again, a little bit smaller. Not likely to move anything on the back of yesterday's FOMC release, which was obvious to us guys, more of a larger market reaction than expected. We'll go over that result in just a moment. We're looking at the euro dollar, which has been the primary scalp we've been operating in. I hope you guys caught Aussie Kiwi too, because that one was a textbook break as we were just after the post that we made last night. So we'll go over that as well. As usual, anytime, guys, have any questions, trade setups you'd like to view, specific pairs, feel free to throw them on the message board. Mark will definitely take a look at crude. I know you're not trying to call a bottom on this one, but we'll definitely take a look at that chart. As a disclaimer right now, guys, I'm holding a small euro short. We just came off resistance. We'll go over that in a moment as well. So a quick look at relative performance for the greenback. You can see it's a pretty split decision so far. Euro highest performer on the session, up 0.45%. Kiwi and Swissy with their own respective gains. Biggest loser, Aussie, down 0.5. And that made the Aussie Kiwi trade a really, really nice setup last night. We just came into a major key support barrier. That's sort of where we're sitting right now. So we'll go over that first on Aussie Key. On the look of the risk side, real quick, what we've been seeing, you had another almost 3.5% drop last night in Shanghai. You're getting some of these echoes now starting to really circulate the globe. So what yesterday's FOMC policy minutes showed, essentially, guys, that as we've been saying here for the last couple of months, there is no chance that they're going to be moving on rates in September. The concerns about China, the concerns about the stronger dollar, and specifically the concerns that they cited on acceleration in wages not showing. Okay, we know out of the dual mandate, price stability and fostering maximum employment, that inflation is the laggard. So if they're already concerned that price acceleration is not there, and that's already been the laggard of the dual mandate, it makes it a much harder case for them to start normalizing. And that's really what markets hung on. Add to that, guys, that this is the minutes from the early or the last FOMC policy meeting, right? So it doesn't take into account anything that we saw last week, the move on the yuan from the PBOC, the concerns that we got in the spill that we got, the 5% drops that we got in Asian equities. None of this is even filtered in, and they're already concerned about China being a global impact. So all these things really shackle the Fed and really make it much harder for them to justify liftoff or normalization of policy. That's all I'll say on the fundamental side of things. It's kind of exactly in line with what we've been discussing here over the last couple of months. But again, it doesn't matter. We're not here to dictate policy. We're not here to say, I told you so. We're here to trade what the market's giving us. So now that the market's starting to filter that in, September is not going to be a rate hike. You're seeing the dollar start to come off. And certainly that's helped us out a lot on the positioning. Dollar yen is another one that was on the radar charts last night. We'll go over that, finally making a break of that 124 handle. All right, so let's jump right into things. First thing is first. Promendra, good morning. Just saw your note there. Eileen, Mark, great to see you guys as always. First things first. Dollar index. So you saw this chart last night on the radar charts. We just wanted to highlight a couple of different key levels here. Nothing's really changed as far as the levels we've been highlighting on this index. The bearish bias remains in play below 12,012, which of course is the monthly open. Last night, when we made this post, we were just noting that we're approaching a sliding parallel extending off the June 30th low, and that's this one right here. So, we could see some more upside here, but looking lower below 1212, and that's exactly what happened. You got a nice stretch as high as 11,995, and here we are right back lower again. You could see this start to give us a little bit more of lackluster price action into the end of the week, but this is really the key support barrier that you need to confirm, is the word I'm looking for, I guess, the turn here that we're seeing in the dollar index. Such a scenario, you're looking for targets at the 200-day moving average, that takes you into 11,928, and then key support zones right down here, 11,880 into 886, into 11,902. Nice pivot region, swing highs that you made for the February trade month, the swing lows for March, huge region. And you also have the lower median line parallel in there as well. So the game plan is set. The levels are pretty clear. Again, we know this is key support that we need to get through. On a near-term prospect, dollar index, like I said, it could just wobble along here for a while. Okay, here's what it looks like on the 30-minute. So, I wouldn't be surprised if this thing spends some more time, stalls out here. You're looking at a confluence down here at the 38.2, that 11,942 level, basically into the end of the week on Friday. So still looking to sell rally, still favoring the short side, but levels are pretty mapped out on both sides on what would invalidate or validate the turn in the index. So for guys trading stateside, obviously we can't trade this specific asset, but like we always say, the dollar index at its inception, specifically this one, the Dow Jones one, gives you euro, dollar, sterling, and yen equally weighted. So it gives you a much clearer picture of base dollar movements here. Any questions on the index before we move off? All right, so let's jump into last night's scalp report. First things first, and that is the Aussie Kiwi. A beautiful play, and it continues to impress. So early in the week on Sunday, we highlighted this 2014 high day close, which was a nice confluence region with basic trendline resistance. And we were looking for confirmation of a rejection here, a move lower. Momentum was moving right into that resistance trigger. So you got that move, and the continuation lower came into key support. Personally, I thought we were going to get a bigger bounce off this last night, and I even noted that possibly a larger correction, but we'd still be looking to sell that rally. So in fact, that 111.45 level never broke, okay, and it remained the opening range high for all of Asia until it finally gave out. You saw it run right into 11.05. Again, that was a near-term profit target, and then the key support 110, 55, 110.67. Here's what the live chart looks like for Aussie Kiwi. All right, so that magenta line that you see there is actually the monthly open, again, near-term support. And a break below this region, I don't have it highlighted on the daily here, I'll show you in the intraday, but a break below this and a push back below that slope reinforces the downside move. Also note, this is the first 50 break that we've seen in momentum for the month. So further reinforces the downside. I just bring your attention to a couple of things. We want to see this momentum signature close sub 50 to really get the validation that momentum has shifted on a daily basis. And we want to see that close below the monthly open also to give us conviction to continue favoring the short side. Not really holding anything on this. That the last limit got taken out on the drop into the monthly open there. So we'll be looking for possible reentry. It fits really nicely with what we've been looking at the Kiwi dollar. Kiwi dollar has not broken resistance yet. So we're looking for that 66.30 level to really pop, and some Kiwi strength should further validate and further help this trade get along its way. So here's what it looks like on the 30-minute. And again, a pretty clear cut. The trigger actually came in a little bit late on the break here, but the initial move or the initial trade would have been initiated up here, okay? And this is going to be that level that we were trading into as we were posting this yesterday, right into that 11.45. It held all the way a couple hours into the Asia Open. You saw a break of the Asia opening range low, really tight range, stop against the highs, first target 11.04, and the second target, again, major key support. Keep in mind, this is also that 10.55 level is also the 618 retracement, okay, of the advance off that low that you made in July, specifically on the 28th. So little region or a pocket of support here. A downside break beyond this, you're looking for the opening range low for the month, and that takes you right into the 110 handle. At this point and at this juncture, we're going to want to bring down our bearish invalidation level to the highs that we made yesterday. So last night on the report, we noted the bearish invalidation at 112.08. At this point, we'll drop that down to that 111.75 region. So if you get a break of the U.S. opening range back to the top side, specifically, more importantly, if we break back above the median line, we'd still be looking to sell a rally into one of these targets. We'd be looking for short triggers into one of these targets. And near term, here's the resistance trigger that you'd want to stay clear of on the short side if we do break. So if this low is preserved into the US Open, you're getting some near-term divergence. These near-term divergences that we keep noting every night, guys, simply give us a reset to pop, and that's been the last 3 days, the story of the last 3 days. You had some divergence into this low, got a pop, that was a reset. Again, even into this low, with these two lows, you had some divergence. Again, that pop just gave you a reset. So if near term you do see that resistance trigger give out, we'd be looking for that rally to sell somewhere in the range of 111, 111.45 for targets. Any question on Aussie Key? Quarter of the daily ATR is still only about 26 pips. I've kind of been stretching that a little bit. So for example, on the first exit, I would have taken, well, let me tell you what I did take. In the first exit, it was I kind of stalled out and I pulled out at 19 pips, and the second exit was 31. So, you know, play with the quarter ATR, guys. More importantly is what price action's only what it's saying. Remember that, you know, this is always just guidance. We never want to be so strict and rigid with our rules that we're bypassing or overlooking what price action is saying. So just a word there for a quick tip on scaling out of these positions. Andrew Smith says, just bought that 618 on Aussie Kiwi. Haha. It might work out, Andrew. You might get a pop to the top side. And like I said, I wouldn't be surprised. As I said, for the euro, I'm still bullish, but I think near term you could get a little bit of a snack back towards 1150 or 1155. So that's exactly how you want to play the levels, Andrew. And that's the beauty of the strategy, in that, you know, we can play the same range over and over again. Whereas a longer term swing trader, we're just looking for this drop of this, you know, 100 pip range. For us, we can continue to play this range over and over again, really maximizing the intraday swings that we see. So Andrew, I got nothing against that. I would keep a tight stop once the opening range sets for US. But near term, yeah, you could definitely see a pop in this, specifically, like I said, if that resistance trigger gives out into the open. Does that help, Andrew? Not bad. I mean, it's a big level. Okay, so that is Aussie Key. Next up on tap from last night is Euro Dollar. Here's what the Euro looked like on the daily. And, you know, this was on the radar charts yesterday, late last night or yesterday afternoon. I posted a piece also on Daily FX on it. It's pretty clear. As we were talking during yesterday's webinar, we were coming right into the bullish invalidation level. And I think we were talking about that here in the webinar. Where's the scale chart? Here we go. And the 830 print for the CPI data, again, was a little bit weaker on the month-on-month. Year-on-year was right in line with expectations. You saw that spike take us right into that confluence region and hold. Literally, guys, the stop on this one was like 2 pips out before it. I mean, literally another 2 pips and we would have gotten stopped out. Sometimes it's better to be lucky than skillful. But the tell was that momentum couldn't even make a barrier break below 40. And then once you cleared the upside of the range deeper in the session, you know, that was pretty much, this was on obviously the FOMC interest rate minutes release. But that was really, I mean, the clear tell. So we've made an objective break of the weekly opening range high at this point. The weekly opening range high came in at 111.18 or so. You can see here's the Sunday open. Where's my tag? Okay, so objectively, this shifts the bias to the upside. And not only that, you got further conviction in overnight trade. When this thing rallied, just missed the high day close, came back, tested the opening range high again. So 111.07, which is what was noted on last night's piece, actually is the weekly open. You can see that caught the low almost exactly to the pip. So conviction in our analysis, guys, and really helping us get some more clarity here. So came back, he tested that as support, momentum really struggling here, price action continuing to push into extremes, the oscillator not pushing into extremes. Okay, so you're seeing some near-term divergence here in the momentum signature. This is a sliding parallel that has been in play. Let me show you where that one extends off of the lows that we made here in August 3rd. Okay, that caught the low that we made here on the 13th. Here it is catching the highs. Okay, so you had some divergence into the highs near term on the 5-minute. Near term on the 5-minute, the trigger actually gave out a while ago, right here. And I've been watching this divergence signal as price action continued to push into new highs. Okay, and here is the break below 60 as 60 was holding support. So we're short against the highs. We're not looking for anything too crazy on the move. Again, I'm looking for this pullback to get back on the long side. Near term, as I said earlier, 50% of the move just off the low gets you 1150. So 1155, 1150, we'll look to jump out of this, possibly look for a re-entry on the long side. And, that's going to be the game plan for the euro. At the end of the day, this is going to be a big break. And that's why a little bit more conviction on a possible short here into the open. You're looking at the monthly opening range highs, a key 618 retracement from the decline off the June high, and this sliding parallel actually dates back to August. Okay, and it's a slope that mirrors back to the May highs of last year. We've talked about this slope before. So we're finally there, and that kind of coincides just ahead of that 1195 target, which is to the 618. Just beyond that, at 112 is actually the highs for the month, and that swing high from July. So you're coming into a nice region of resistance. We're still favoring the long side, and we'll see if we can't get this pullback to get us a better entry for that position. Any questions on the Euro, Scout? It's interesting because you come in the morning and there's always some emails from various reporters around the city or guys on sales desks who we've cultivated relationships over the years. And it's funny because all of them are looking at the euro crosses and they keep saying nothing's really going on in the euro, and I keep respectfully disagree. What do you mean nothing's going on in the euro? What charts are you looking at? If you're looking at the daily chart, yeah, we're broadly in the same range, sure, that we've been in 3 months, but considering that we've been making 100, this has been expanding. We've been somewhere in the range of 100 pips on the ATR. And yesterday alone, okay, we made, I don't know, 140 pip rally. That's a tell, right? That's a tell. So, we just need to make sure that we're shifting our attention to really not what the headlines are doing and not what the major, financial publications are saying, but we need to shift our attention to what is moving in price and what's clearest in the technicals. So any questions on euro, feel free to let me know. Entry where again, Kelly's saying? So the entry actually came out at 1170. And the stop is right against the high here, 1180. Actually, it's a little bit higher, 1188. 1188 is being just against the high that we made here for that swing on Friday of last week. Okay, 1153, as we said, is the high day close. So that's the initial target. And on the near term, on that scalp chart, it's the 50% retracement, or just about, of the rally off the lows. You're also looking at the swing high that you made for Asia. So nice little level there. Kelly says, sorry, pal, LOL, the long. Where are we looking? So there's room on the long side. And again, I'm going to leave that, Kelly, for Jamie. So Jamie's intra-week or weekly, midweek strategy webinar, guys, will be today at 1 o'clock. And I'm going to default that to him. The top side, as far as where the potential is from my standpoint, Kelly, if we break above 1195, okay, first of all is going to be the upper median line, or the median line parallel, excuse me. That takes you somewhere in the range of 1250. More importantly, I do think, personally, it's my personal opinion, that you do see the 200-day moving average. My strategy is a little bit more short-term, right, Kelly? So we're going to play this on a step-by-step basis as we break through these ranges. I'm not going to be looking for a position on the long side all the way up into 113 from here, but certainly the propensity, guys, for the market to see this is really not that far off. Got that trend line resistance off the highs from May, the 200-day moving average, which has not been touched since July of last year. And, with what momentum is doing, it's well well within the time frame here to see this pop. First things first, you could get a nastier correction off of this median line in 1250. So, Kelly, I hope that offers some clarity on that. Kelly says, you got it. Eyes wide open, finger off the mouse till you guys call it. Cheers, and we'll keep you updated for sure. For sure. I like the price action. We're finally starting to see the dollar turn here that we've been talking about after weeks and weeks of just lateral movement. Finally starting to get some play. And volatility is only going to pick up, guys. So as we head into the September month, the FOMC policy decision next month is going to be massive. You're likely to see volatility really spike. And one thing I do also want to note, you hear people talk about how small and how tight volatility measures are right now. If you look historically, it's a tell. Periods of real strong surges in volatility are typically preceded by periods of very, very tight and small volatility. So the longer we stay in this really tight range, the more explosive the breakout, and the better it's going to be for us as we get some more swings to play with in this market. All right, so back to business. Kelly, hope that helps. And those are the two major scalp setups from last night. Those are the two that I've been operating in the most. I do want to take a moment just to go over the radar charts. We went over the dollar index, dollar yen. My buddy, the dollar yen, finally making this move. So if you guys remember, we've been following dollar yen on the scalp intraday updates for the last literally 2 weeks. And the whole focus for the last 2 weeks has been on a break of this darned support region. And it basically was defined by 124.13 into 124.35. We came back, we tested at support, we tried to break into a new high, momentum failed at 60. We had an outside key reversal day that took out the entire monthly range. Again, similar to the trade that we're looking at on the Kiwi. The singular outside reversal at the highs that takes out the entire month further adds validation to a simple break of the monthly opening range. And that's all we're waiting for right now. We finally made it below 24.35.13. We closed below it. I'm bearish below this region. The conviction for the turn is a simple break and push through the monthly opening range low. And that comes in at 123.77. Okay, it's weird because yesterday we closed at 123.78. So we literally probed below it, then closed right into it, which is why I wasn't surprised to see this bounce. We even noted it in the piece yesterday. But you're still looking to sell rallies below 24.35. Here's what dollar yen looks like on the intraday. So the reason it's on the radar charts, again, the momentum or the volatilities continue to contract. You're only looking at about 17 pips per scalp here. Very, very tight. But, the triggers are there. I think we're getting clarity on the bias. And, it's something to keep on the radar. If you get a decent trigger heading into U.S. trade, there's no reason not to jump on this one. It was a beautiful play on the FOMC release. It just all happened too quick. It all happened too quick. Unless you were well positioned before that, you really couldn't trade that release. And not only that, it's the release, in fact, that prompted the break of support and the opening range. So on its face value, it's a simple weekly opening range break. You stay bearish below 124.17, which is the bottom of this range. And you need to break above 124.35 to get back on the constructive side of things. A move lower, you're looking for 48, 49. Let's just call it 123.50. But more importantly is the confluence down here. 100% extension off the highs that you made for the month comes in at 123.12. So some clear-cut targets here for the dollar yen. Still on watch. I haven't really done anything on this. With the range so tight, I'm going to want to get a really good entry on this so I can sit through it. But near term, 123.83, just keep in mind that's the monthly open. And the 618 comes in at 123.86. So momentum holding as support along 40. You could sit a little bit of an upswing, and we'd look to sell somewhere near 124.35 if we can. Any questions on dollar yen before we move off? Finally, this thing's starting to move. It was good to see that yesterday. Okay. And those are the setups from last night. Last but not least, real quick, Sterling Key. Listen, this was the clearest large range scalp that we've been watching all month long, or all week long, excuse me. And when I say long range scalp, it's just because it has a radically large ATR than we typically trade. I typically like to have a pair that has 150, 160 pip ATR. This thing on the daily is what? It's like 300, 288, right? So a quarter is still 75 pips. There's 72 pips. The good thing is it gives you a little bit more flexibility with, don't have to be so dead on with your entry, right? Because you have a little bit more room. The bad thing is the bad scalps are going to hurt all the more. So the only thing I wanted to highlight on this, and we've had this on the radar charts for the last few days, is the consolidation. It's a clear-cut consolidation. We continue to see lower highs, higher lows, and the levels were very clear yesterday when we were in the webinar. Again, last 2 days, as we were talking about the webinar, this thing was checking the upper median line parallel. Yesterday was the same exact deal, right? We were checking the upper median line parallel. You got a break of the opening range for US trade. Didn't happen until late in the session. And then you got a massive drop right into key support, well over the 73 pips that we would look to take per scalp. So another one, scalp the range until it breaks. It's very, very simple. You want to be buying at support. You want to be selling at resistance. And until we see a breakout of this range, typically these consolidation patterns will break 20 to 30% into the apex. We're almost there. We'll look for a little bit more clarity on a break in Sterling Key. A little bit harder to call from the fundamental bias just because we're kind of looking for confirmation of a Sterling breakout. At the same time, if 6630 pops on Kiwi, that's probably going to be a breakout. So you could see some more lateral movement here, but we take every trade on its own merits. So that's the focus right now for Sterling Key. All right, we made good time. We got through all of the setups that we've been tracking on SB as far as the intraday setups are concerned. Let's jump into your questions. Aussie Key, Andrew, I got that one. Chintan says, can we look at Aussie Kiwi, please, Mike? So Chintan, we looked at that early in the session. Is there a specific question that you had? I think you might have popped in right after it. It looks good, man. We're at support, though. Okay, so you got to remember 110.55, 110.67. This is the monthly open. This is the 618. You're at near-term support. There is some divergence in momentum. The broader bias still remains in play. From a scalp basis, you could see a little bit of an upside pop here. I wouldn't be looking for too much. The median line comes in right around 110.80. Then you have the lows, i.e. the 50, that comes in at 111. But the broader bias remains weighted to the downside at 111, below 111.75. So I'd rather be, selling rallies per se in this one on the more medium term. Near term, immediate focus, you got to watch that near term support. I see a lot of questions on dollar CAD, and it looks like it's on the move. So let's take a look there. So dollar CAD, it was a rough day for dollar CAD yesterday. I got stopped out on this one as well. I know the swing side of things was looking at dollar CAD. Listen, Mark, are you in the room? We were having a quick couple back and forths yesterday on Mark McDowell. We were talking on Twitter. I don't want to be the one calling the high, Mark. And while this thing did rally into 131.76, actually, it was a perfect tag. When we break an invalidation level, I can't keep being stubborn. We talked about this in the webinar. 130.94, that was the weekly open. That was the median line parallel. And once that gave out, done. I washed my hands of it. I'm not looking to short it anymore. Now, obviously, if it comes into a major resistance and you get a compelling short trigger, sure. Did I know that the release of the FOMC was going to see a reaction that saw a decline of this magnitude? No, but I'd rather sit this one out because the clarity is no longer there and shift my attention to one of the pairs that we just went over where we have a clear-cut bias and the data is actually helping us get a better entry. Does that make sense? So listen, this thing could still turn around. I love the level it turned around at, 131.76, again, the high day close. If you look at the lower median line parallel here, we still haven't been able to push through and close above. So the potential is still there for the turnaround in the dollar CAD. I just like see technical clarity elsewhere, and I'm waiting for that. I'll wait for this to sort of pan out before I get excited about playing the dollar CAD pullback again. What else can I say about this? I mean, what would put me back on the bearish path? A break below here would shift my attention lower. A break below here would confirm the break lower. So this is just the objective, irrespective of what I think, the objective weekly opening range low. And if you look at the slope here off the low, if this is defining price action, and I just kind of threw this on here earlier today, this would be the initial break that would give us confirmation, would put us back within the confines of that upper median line parallel too. For dollar CAD, guys, I'm going to be looking to play this very. Let me take a step back. Here's the Kiwi dollar setup from a couple of days back, and we've been tracking this one as well. The reason that we like this setup so much is because it's very, very objective in the opening range for the month. Again, you had that outside reversal day on the 12th, which encompassed the entire monthly range. We're still trading within that range, and a breakout of that will confirm our near-term directional bias. It's the same thing on dollar CAD at this point. The initial play to the downside was really initiated with this break, as it looked like we were going to finally made it out of this formation. Now that we've broken back and tested that, still looking lower broadly. If you put a gun to my head, I'm still watching momentum here hold below 60. So there's still a lot of indication that it could turn over. But for me to really start to get back on the scalp mode of pressing the shorts, I'd need to see a little bit more conviction here. Guys, does that make sense? Turns out a lot of you are watching dollar CAD. Bernard is asking about dollar CAD. Mark Haberman, Kyle, wow, Premendra. Yeah, you guys are really loving this trade. And again, if you put a gun to my head, I still love the short side, 100%. But am I willing to get in here? You're already 70, 80 pips off the high, 90 pips almost. And if I'm not mistaken, which I'm not, here we are, we do have tomorrow CAD data, really critical CAD data, okay? You have retail sales for the month of June, and more importantly, the July CPI or Consumer Price Index gauges. So you'll get a nice update on inflation from Canada and an update on consumer spending and retail sales. So look for that print tomorrow at 8:30 Eastern. May offer some clarity finally if we can clear this opening range. So the point I was trying to make earlier, guys, on the daily chart, this is the same thing. You got a really nice opening range for the month to work with. Yeah, we'll miss a pretty big portion of it if we're not short already. So I'll default again to Jamie for the swing setups here, but obviously the region of which we reversed at, really impressive, really impressive. It's the second day, by the way, and defense of that 131.76 level. Mark says it's short from 131.55. Nice entry. My man, that's an awesome entry. So 131.50, if you recall, 764 retracement. Actually, if you bring this into a 786, I bet you that's the exact level. I usually have the 86s on the commodity block. 31.56. Was that 786 retracement, and then again the high day close is where you would have wanted to have your stop against. So excellent entry, excellent entry. Watch as you get into this region here, 130.60. That's also the swing low that you made for the initial weekly opening range. And then obviously the weekly lows would be the key support. And we don't need this anymore. Let's just update this real quick while we're here. Even better. Even better. Adding further validation. 50% retracement comes in right around 130.64, 130.63. Looks good. Looks good. All right. Just want to take a quick look back real at the dollar index. Let's see if that's giving us anything. You know, on the slope here, there might be a more compelling slope if we work with something like this. Let's see if this holds up today. The reason I like this slope, again, actually, if you look at it, the median line, resistance, pivot, resistance, resistance, break, pivot, and you're also seeing the highs match up pretty well here. So let's work with this for now. We'll see if this offers any guidance, but further adds validation below that swing high we made to continue to look lower here in the dollar. All right, so Mark, I want to take a look at for your question there on crude. Obviously, a very tough market to trade at this point. Um, you know, you don't want to be calling lows on this thing. I definitely agree with you on that. 40.54. I can't remember why we highlighted that level. It might have been the swing low from 2014 or something. Interesting, because we just hit it. Long story short, the only thing I wanted to highlight was this. You're in a really, really tight descending channel that is extremely clean. Multiple touches on both the resistance and support barriers. If you take this and you make a sliding parallel off the highs that you made for that swing high for the month, you can see that even those last three peaks pretty well, still line up pretty well. So as that stands, it adds conviction for this being sort of your near-term, you know, topside barrier resistance that you want to watch for. And it's basically the swing low that you made for, what is that, March? And that sliding parallel off the highs for the month. The 786 retracement that you see here is actually from the lows that you made. This is financial crisis. Oh, this is the 1998 low. But I mean, I wouldn't even touch this thing on the long side unless you see a 30 break in momentum at minimum, and a break of that outside day again. These outside day reversals, when they're reversal candles at the lows, can sometimes precede exhaustion moves. Having said that, you saw a couple of them already, and the exhaustion relief rally was pitiful. Where's another one? Well, you get the point. Here's another one that actually didn't give you any relief, just continued to move lower. So I wouldn't put too much emphasis on that. A break lower, looking for 39.79. That's all I got, Mark. I wish I had more for you on crude, man. It's a never-ending decline. I don't know what to tell you. I was talking to Jamie about this yesterday. We were actually laughing, a good laugh about it. I don't even know if support exists in the crude market anymore. But if it does, you're looking at it right now, the low that we made today, and 39.80. You'd be the next level down. You're more than welcome, man. Graham says, fill your car. Oh, trust me. There's a little bit of a lag time between crude prices and gas prices, but they'll hit. They'll hit. All right. So Eileen says, sterling dollar, might it catch legs long at the 50% of the run-up from yesterday after the spill this morning, but gaining more? Here's what the pound looks like. British pound, British pound. There we are. Okay. Yeah, so this thing hasn't changed. Actually, I didn't check this out today. I don't want to touch this thing until 57 gives out to the resistance side on the upside. I am constructive. I do think you see much more upside here. The policy divergence, which is funny because people don't see that as a driving factor for the sterling dollar. I do still. The policy divergence that you're seeing, especially on the back of the CPI data that we got both from the US and the UK this week. US CPI slightly weaker on the month-on-month. Sterling CPI or UK CPI slightly stronger. And we know that the BOE we've been saying this for months now, that the BOE is probably best poised, second central bank best poised out there to start the normalization process. And I think you're going to start to see that filter into the exchange rate. That's the fundamental side of things, my take. Technically, You have 56.80 into 57, which has been a major key barrier. It caught the high stretch that you made into the close of July trade. It caught the high stretch for the last, well, this week multiple times. It's the 618 extension off the low. It's the 618 retracement off the high. And that's the region we need to get through to validate the breakout, period. So the daily chart, the reason I haven't even done anything on this is because we've just been consolidating below that resistance. I need to see that close and finally give us some upside there to validate it. Here's what it looks like on the intraday. Eileen says, 57 giving out makes more sense, right? It's just, you can look at the chart and see it right there. It's been trying to clear that level for so long. There it is on the 57 as the 618 from the high. This is the structure that we were looking at last week. And you can see still haven't quite cleared that median line to the upside. This is just a basic trendline support off that low. This is actual median line formation. So we're watching both of those regions sort of line up just right around that 57 region. You see that, Eileen? So still sort of the region I need to clear here to get the validation for the turn in sterling. And man, this is a professionally traded market, guys. So, the king of the fake outs, the king of the overthrow, a break of resistance and a pullback, the king of the false break, is sterling dollar. It's just known. So I tend not to really get involved on a sterling dollar specific trade unless there's a little bit more of a clear directional bias. Trading the ranges can be a little bit more of a treacherous proposition for this pair. A lot of back and forth. Make sense? Eileen says, yep, all right. A quick look at the gold market, something that we've talked about here as well. Continue to see some further upside. Here's what the weekly chart looks like. And lo and behold, here we are with a almost 100 pip rally, $80 rally off the low, guys. And coming into some very, very key resistance defined by 1145 into 1155. It's a little bit bigger of a range, but this is a weekly chart. You're looking at the former low day close for the year, a 618 extension off the highs from last year, a 618 retracement. This is off the lows that you made in 2008, 1618 off the record highs from 2011. It's stacked. It's stacked. Basic trendline support, turned resistance. It all lines up right here. So watch 1145, 1155 for a resistance here in gold. A break above that region, and you're really changing the game. Okay, you're really changing the game. I don't necessarily foresee that happening, but it really depends. If you see the acceleration to the downside in the dollar, it could very well be the case. And specifically with inflation holding off an interest rate hike, gold doesn't hold a yield. And as those interest rate expectations get pulled in, that's why people start to dump gold. Why the hell am I going to hold on to gold when I can put my money in a U.S. account and get, X amount of interest? Right now, that interest doesn't exist. So the call for gold has sort of been the reasoning that you've seen gold see these upswings. But as we get closer to, we're gonna raise rates, we'll see rates raised. Here we are. What? Rates aren't coming in September. Things are changing. Okay, so look for resistance in this region. I'd actually be looking for some short triggers as you get up into 1155. A breakout beyond that, like I said, would really shift the focus more so towards that 52-week moving average, and you're basically looking at 1200 at that point. So don't get faked out by the perma bears that are all just sell gold at all costs. If you would have done that for the last 2 weeks, it would have been a rough 2 weeks for you. SPX, a quick look there. We did break below the median line today, it looks like. Yesterday we closed right there, and I was looking at this into the close of the market. Watch today's price action, guys. We have seen huge swings below it, but nowhere near a close below that median line since the July dip. So near term, this is 50% retracement of the entire 2015 range. A little bit lower off the highs, you're going to run into that median line as well. So SPOOs with another drop here today, looking for some near-term support. You did get the support trigger break and the confirmation of that with yesterday's close. And you know, a move below 2055, you're looking at 2037. A little bit more of a key support there. But you'd stay bearish below the 200-day moving average, and that's 2080. So as long as price stays below today's highs, which we already tagged it, you know, you'd continue to favor the downside here in SPOOs or in the SPX. If there are no other questions, we'll go ahead and wrap that up. If you do have a quick question, feel free to throw it on the message board, guys. Like I said, we're pretty much spent for the remainder of the week as far as key event risk. Tomorrow you do get those Canadian CPI numbers, so watch that for that CAD trade. You know, I'm not, like I said, I'm not really a fan of getting too overwhelmed on this one again, but still looking lower, still looking lower. I'd love to see that 30-60 break here to get us some conviction on the short side, but we'll see if dollar CAD can give us some clarity. Watch Aussie Key, specifically Aussie Key on the upswing here. You know, if you do get that upswing coming into a nice, oops, where's Aussie Key? If you do get that upswing giving us a nice trigger to the short side, again, we'll jump right back into that. Euro dollar 5-minute trigger, you're in, I'm not sure what you're saying there, Graham, and going back up. 5-minute trigger. So it does look like a 5-minute trigger gave out. I actually peeled off a little bit at 11:55, which was at 38.2. Half is still in there, so I'm going to leave that into the open. We'll see if we can get a downside break. But in general, we're still looking higher, guys. So don't get too. That was just a scalp on my part. Don't get too excited about the short side here. All right, guys, we'll wrap things up here. Remember, 1 o'clock, Jamie will be on with his midweek strategy webinar. We'll keep you updated and give you an update later tonight on what scalps we're looking at into the close of the week. Best of luck trading, and I will see you guys on Monday. Cheers.